The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
Welcome back to Commodity Classics. I'm Michael Yorba, your host. Thanks for joining us. All right, we're going to talk about Forex in this segment. I put together a demo $5 million portfolio so you can see how you can achieve higher rates of interest on your money when it's time to go to cash. If the stock market plummets, you need to get to cash, but you're looking for a higher yield than the current 3.85 on the money markets. If the gold market plummets at the same time and you decided that you don't really want to assume that price risk and you want to go to cash, but you want to park some money in a higher than 3.85 yield, what can you do? Well, I'm here to show you how to do it. But first, my producer has brought up a few slides that we're going to walk through. And the first one here, it's the world's largest market. It's been around for a lot longer than stocks have, contrary to popular demand. Why Forex trading? Well, Forex traders, you've got 24-hour access to the market, and it's got better than average liquidity. Let's move to the next slide. The Yorba FX fund was originally developed. I put this thing together about 3 years ago with real money. It took me a long time of trial and error to kind of come up with what I really need to do in order to put on intelligent trades. Ladies and gentlemen, I'm going to walk through some of this in highlights. You can go back and read this later if you like. First Yorba FX fund, the first account I set up with this was in February of 2005. And last year we picked up a little over 47% on the original account value with an average annualized interest of 27%. So really the benefits, what I'm trying to do is make your money work for you, not just in for your financial institution. Interest earned daily, 7 days a week money goes into this account. Maximize your earned interest, use the profits to offset capital losses due to currency fluctuations. So if you're tired of other investments that, or you own, allow us to introduce the benefits to the interbanking world to you, and take control of what you're doing with your cash investments. Let's come back in. We're going to go right into the trading platform. I'm going to show you what I put together just so that you can see how I set this up. And ladies and gentlemen, I urge you, don't think that you're going to reverse engineer and go through and try this on your own just off of what you see on this show. It's fairly complicated, but the rewards can be very, very fulfilling. So let's start off here. I'm going to walk you into this account. I set this up last night. That's a $5 million balance. Right now we're up about 56,000 on 5 million, which really isn't a whole lot. There is the net asset value. This account has got to drop to 266,000 to get a margin call, and we're using 533,000 out of 5 million, so that leaves us an extra 4.5 available. The leverage right here, 15 million, so it's 3 to 1 leverage. Now what I'm going to show you is I'm in 15 different positions. I've got that account spread over 12 different countries. And let's see if they put the money into it. And I'm going to roll this through. No, they haven't dropped the money into this. Let me show you the different positions that I'm in so you can see it. I'm long Canadian dollar, Japanese yen. I'm long British pound, Japanese yen. I'm long Australian dollar, Japanese yen. I'm long Swiss franc, or British pound, Swiss franc. I'm going to roll this over. Come down a few more. I'm short US dollar, South African rand, and I'm short. As a matter of fact, you know what I ought to do while I'm doing this is give you the interest income from each one of these. I will. I am short Euro Aussie, short US Mexican peso, and let me give this some I am long the euro yen, long pound US, I am long Aussie US, and I'm going to also show you that I'm winning in, most of them. Short US Turkish lira, I'm short US Indian rupee, I'm long Swiss franc over Japanese yen, and I am long New Zealand over US dollar, and that's the end of it. Now the exposure, this money is spread amongst the US dollar, euro, Japan, Switzerland. Let me move this over here a little bit. And the money's also in Mexico, South Africa, England, India. I'm going to show you all of the countries so you can get an idea how diversified it is. Canada, Australia, Turkey, and New Zealand. All right, and as you can see, this is a recent trade, May 27th. Let's come back to me for just a minute here, Don. All right, now I'm going to walk you through the interest income in these different positions so you can get an idea what we're doing, how we position the portfolio, and how you can get much better than average interest income on your money. Let's say that you're an investment banker. Let's say that you're a venture capital company, or just say you're a regular guy trying to make an extra buck on your savings account, but it's not going so well. Yesterday we told you that we had a pretty good devaluation of the US dollar against the euro. I think it was 18%, 25% against the Australian dollar. We went through a bunch of them. Well, you just lost money by putting it in a T-bill relative to your purchasing power. Here's what we've got. Australian dollar pays 124% interest on the money. And these are positions that I put into this portfolio. Australian US, meaning long Aussie over Japanese yen, 124%. Aussie US dollar, long the Aussie over the US dollar, 89%. I'm going to round it off for you. Canadian dollar, Japanese yen, 44% interest. You got to be long the Canadian over the yen. Swiss over the Japanese yen is 26%. Let's see, I'm in long, short euro over Australian dollar, picking up 56% interest. These are annualized numbers. Long the euro over the yen, 61% interest on the money. Long the pound over the Swiss. It looks like I got a couple of questions. Let's bring that up. And when that reboots, I'll answer these questions. New Zealand, U.S., 110% interest on your money if you're long the New Zealand over the U.S. Let's see here. Aussie Pete, do you see a crude rally into June 3rd from here? Actually, Pete, I think that we may be looking for lower prices into the June 3rd aspects, and I'm going to cover that tomorrow with Tim Bost. So basically, are you long countries with a high interest rate and then sell those with a low interest rate? As a matter of fact, that's what we're doing is we're borrowing at a cheap rate and investing at an expensive rate. So yes, for the most part. In some conditions, and we'll get into the borrowing lending rate at another show. I want to just walk through some of these so everybody gets an idea who may not know that this exists. Let me finish these. Mexican peso, I'm in that one. 84% interest on the money if you're short the dollar and long the peso. Short the U.S. against the South African rand, 149% interest on your money. If you are short the U.S. dollar over the Indian rupee, 39% interest. If you are short the U.S. dollar over the Turkish lira, 254% interest. If you are short the euro over the Turkish lira, 223% interest on your money. All of those positions are in the account. Every one of them, you saw the results of what I did there. Tomorrow, we're going to show you what kind of interest income you get on a daily basis, and we're going to add up the annualized interest in there. This carry trade, like I said previous to this, I've been trading with real money. Here's the question you need to ask yourself. If you trade FX or you put your money in the hands of a broker who's trading FX, are you getting this kind of interest deposited in your account, if you're trading in these positions, a lot of people say carry trade. I hear them talk about it all the time. Oh, the carry trade is unwinding at this, that, and believe me, they don't know what their rear end from a bad boot when it comes to that. This is a carry trade portfolio. A carry trade is not one currency. That's not a portfolio. That's just a trade. You need to be able to learn how to put a portfolio together and diversify your portfolio so that, let's say we have an 18% drop in the US dollar. Some of these other countries, like the Aussie yen, it's not going to affect it as much as if it was connected to the US dollar directly. I've got another question in the shout box. I'm going to bring that up. I'm bringing this out to you so that you can think about these different concepts, because if we do have greater volatility, where we have a 1,000-point drop in the Dow Jones Industrial Average in a very few days, we've got a 200-300 point drop in the gold market, where are you going to go with your money? Are you going to go into a place that's called safety and actually lose more because of a devaluating dollar? There's no guarantees the dollar's going to go up. All right, Greg has got a question. Mike, what is the minimum you can open such an account with? $1, Greg. That's the true answer. What is the minimum that I would set up a fund with? I don't think it's still a speculative investment, no matter what no matter how you diminish the risk through diversification and leverage. But I'm considering opening up a fund that's minimum $2,500. Let the regular guy into it, not just keep it at a minimum of $1 million. And then once we break escrow at $5 million, then start trading it. Give it something, give it some teeth so that you can really see some action. And that's why I set up a $5 million account, so you can see how the interest income would really affect you. And if we have large fluctuations, which I hope we do real quickly, you'll be able to see the reaction of the account. Let me see if there's any more questions here. Now, ladies and gentlemen, tomorrow we're going to cover what is Forex, how does it work, how does this portfolio work, and what interest is getting accumulated every day in this account. So thank you for showing up today. I really appreciate that. Think one thing: if you're not getting this interest, somebody else is. We'll talk to you later. See you tomorrow. Good luck. Good trading.